Hello, Jenny Kassan here to lay down the law. So today I wanted to share a tip with you that I've been talking to some clients about. Sometimes people get a little confused about what they should be sharing with investors. So when we work with clients, one of the very first things we create for them is a term sheet. And a term sheet is a summary document that describes how the investors are going to get paid, basically, and what rights your investors are going to have. So, it'll talk about, are the investors getting equity or debt? Are they going to get dividends? Are they going to get interest payments? How often? All kinds of things. It really talks about the most important key points of what the investors are getting when they invest in your business. And a term sheet is awesome because it helps you just really be clear for yourself. And, you can show it to people and get their feedback and advice. And it just helps you get really clear on what exactly your investors are getting. And you want to really design your term sheet to be super consistent with your business plans, your goals, your values, your expectations of what's likely to happen. So designing your term sheet is really an important process to go through early on in the planning of how you're going to be raising money. And I actually just did a 5-day training on how to create your terms, and I'm going to share, that is still available for free if you want to watch the recording. So I'll share that info about how to access that in a minute. But one thing I've noticed talking to entrepreneurs is they're not totally clear on what the term sheet is for, how to use it. And the way I think of a term sheet, I don't really think of it as a legal document. So you don't actually have to show it to anyone if you don't want to. You don't have to show it to investors. Some investors might want to see your term sheet. If they have experience looking at term sheets, they may want to look at it, and it might have some kind of technical sounding language in there, some legalese. So if they're comfortable with that, they might want to look at it and, ask some questions about it. But if you have a potential investor who maybe doesn't have as much experience with investing, directly in a business, you may not want to show them the term sheet, and you don't have to. It's not one of those documents that the investor has to see. It's really a document for your convenience. It's a place where we summarize the terms that you're going to offer to investors so you can kind of study it and get clear on what the terms are, how to explain them. If you're working with us, you'll read the term sheet and be like, I'm not super clear on what this means. Can you explain this? It's really kind of a document for you to get clear on the terms. We can make changes to it early on if you realize, what, I don't like that. Let's change this. It's kind of the purpose of a term sheet is really to have a document where we summarize the terms prior to creating the actual legal documents that the investors will see and will sign. So it's kind of like a way to avoid legal fees, expensive legal fees of drafting like 1 million documents as you keep changing your mind. So it's basically a summary of the terms for you to think through, for you to show to some advisors, maybe to show to some potential investors if you feel like it's appropriate. But there may be some investors where it could actually backfire a little bit if you show it to them, because it's kind of a technical sounding document. They could get caught up in the weeds, and maybe you don't really need to show it to them. So for example, let's say we've created a term sheet for you for some type of a non-voting preferred stock, and the non-voting preferred stock pays dividends, target dividends, and there's the potential to get a liquidation preference if you were to sell the company, and maybe there's a redemption option. That's all going to be written into the term sheet, but you don't have to show the term sheet to an investor. Instead, you could just describe it in more layperson's terms verbally, or even like in summary on a slide in your slide deck. So you might just say, yeah, you know, I'm offering this equity investment. So you would be purchasing preferred stock in my business. And the reason it's called preferred stock is you get some preferences as a preferred investor. And the way those preferences work is, number one, we will pay dividends. We may not pay them right away, and the dividends are not guaranteed. But when we do make a profit and we're able to pay dividends, we're going to pay a target dividend of 6% to our preferred investors. So that's 6% on the amount that you originally invested. And while we don't guarantee that 6%, what we do promise is because it's a preferred dividend, unless you get at least a 6% dividend in any year, we, the founders, will not take out any profit. So that's the dividend piece. We also are offering a liquidation preference. And what that means is that if we were to ever sell the company or, God forbid, go out of business, you would have first dibs to get your original investment back out before any other investors got paid, or the founders. Now, of course, that comes after we pay all our liabilities and debts. Third, we do have a redemption option, and that is that if you do want to exit your investment, you want to get your money back out, we do have a way that you can request to get your money back out. And the way that works is you would just submit a request, and if we can possibly honor it given our current financial condition, we will do our best to honor it. We may pay you out in the form of cash or in the form of a promissory note. So that's just an example of how you could describe it in more layperson's terms instead of showing someone the term sheet. So I just wanted to talk about that because I have a lot of clients that think they have to show the term sheet to everyone. And honestly, like I said, it can sometimes backfire because it's kind of confusing. It gets people caught up in the weeds. When you can talk about it in more layperson's terms in a way that's going to get them more excited and make sure they understand and don't feel like intimidated. And you never have to show the term sheet at all, because once they say yes to the investment, then they'll get the actual legal documents that reflect the actual investment. The term sheet isn't really a legal document. It's more of just a kind of a summary for, you know, can be used for marketing purposes, can be used for the purposes of you just getting more clarity. So anyway, I hope that was helpful. And like I said, if you are interested in learning how to design your terms for your investment offering, we did create a free training. I did it as a live event where I was answering questions, but we saved everything. We saved the videos, the worksheets. We even saved the Q&A that was asked, so you can see what questions people asked and see how I answered. And so if you want to access that, it is free for now, for the time being. For a limited time, we might start charging for it, but right now it is free. And to access that, you just need to go to jennykassan.com, golden-opportunity-challenge. Golden-opportunity-challenge, because it's all about creating a golden opportunity for investors and also making sure that what you offer is good for you and your business and the other stakeholders as well. And I'll go ahead and put a link to that in the comment section below. So anyway, feel free to ask me any questions you have in the comment section about term sheets and the terms of your investment offering. Have a great rest of your week. Bye.